I know this might be a touchy question, but how do you feel about crude oil investments these days? Yeah. Have you been burned recently? Well, maybe we'll get burned again. But anyway, in today's Cherry Bomb, we're going to be putting on a trade in crude oil futures. So stay tuned and we'll hop right in and get today's Cherry Bomb working. Hi everybody, it's Neil again here with Option Theory. It is May 1st, 2020. Happy May 1st, everyone. And I missed yesterday's trade, which based on today's Cherry Bomb, seems like that's probably a good thing, right? Hey, look, you can't trade every day, and sometimes homeschooling takes a front seat, right? So anyway, today's Cherry Bomb has us putting on a trade in crude oil, right? So let's take a look here at the chart. We're going to put into our ticker, we're going to go /CL for crude light. And we can see that we had a couple of 3 days here of upward movement, a nice bounce up here from some pretty desperate situations here in crude oil. And because it's futures, it trades overnight, right? And so our Cherry Bomb may be a little delayed, and we missed out on some potential profits if you didn't put this on until later. Right, and we don't get these things until the morning anyway. But anyway, so here's crude light. It's on its way down for a little ride here, and the Cherry Bomb email, which feel free to subscribe to that. That's linked to in the description below, right? Talks about what might be causing that. And regardless of what they say there, the idea is that can we put probabilities on our side? Let's test that theory, option theory, right? So let's go over here to analyze. We're going to have crude light in here. I want to be on add simulated trades. We're going to look at the July 47 days to expiration contracts here. And we're going to scroll on down to the calls. We're going to do a short call vertical here at the 26 and 27, right? Strike prices. I'm going to right click anywhere over here in the bid or ask, choose analyze sell trade, go on over to vertical. And I want to make this $1 wide, which is right there, 26.27. So ideally we'd get a nice 30-cent credit. 33-cent credit would be nice because that would be 1/3 the width of the strikes, right? So yeah, cool. Let's put that in there. Of course, here's the problem. Or if you remember, a few weeks ago, I realized my account had been closed. So this new account, it does not have options and futures on options on futures, excuse me, enabled yet. So I'm going to have to wait till 7 a.m. my time to be able to ask for them to enable that again. But were that the case, I would right click this, I would choose confirm and send, as always, to review my max profit and max loss. So we see here, we've got roughly $300 of maximum possible profit while we take the majority of the risk. But what's that trade-off, right? The trade-off there, if we go to the risk profile, is we are looking at an 85% chance of breaking even. So the probabilities here are really good that we would be making money, or at least keeping our money, right? So high probability trade on this one. And those are the kind of things that we like, right? So right click that if you have these enabled, choose confirm and send, and then you hit send. That's not going to work for me, but I thank you for tuning in to today's Cherry Bomb episode. If you put on yesterday's trade and Amazon did have some bad earnings movements, I'm wondering how bad that hurt you. So if you tried yesterday's trade, even though I didn't put it on, I'm curious, how bad did you get burned? Leave me a comment. What's your one-day loss? All right, everybody. Thanks for tuning in. I'll see you again in another video.